If you have ever lost a trade and said to yourself, why did I even take this trade? This video is definitely for you because I'm breaking down the weekly trading plan that saved my strategy and is about to save yours too. In my last video, we broke down the 10 mistakes that destroy trader. Today, I'm giving you the solutions. A weekly trading plan that blocks those mistakes automatically. This is the same plan I use every week before the market opens. It keeps me focused, calm, and consistently profitable. Stay to the end. I will share the one mindset shift that changed my whole trading journey forever. So without further ado, let's move to the first step on our list. Let's go. So guys, the first thing on our list is set your weekly bias. That's the first step. Set your weekly bias. You know we are swing traders, right? We start with the bigger picture. That's the monthly or weekly chart. This is where we set our directional bias for the week. Our directional bias for the week, be it bullish, bearish, or neutral, or be it an uptrend, downtrend, or ranging. Let me tell you guys a little secret. I plot my key levels, my major key levels on higher time frame, that's the weekly or monthly. And when I scale down to lower time frame, I then plot my minor levels on the 4 hours or daily time frame. Even though the minor levels are not that significant, but they are significant because the market might go there and hold there. So you just have to plot that so you don't make any silly mistakes. So guys, I have an example to show you. So let's go to the charts. Let's go. So guys, welcome to my chart. So I'm going to show you a quick example, right? I'm going to show you a weekly demand holding and a bullish bias, and I'll also show you another example where price rejected a clear resistance and a bearish bias. So I'm going to do all those. I'm going to show you the two examples in this chart. So guys, let's go. Let's dive into it. So first of all, you can know that you guys can clearly see that that's the demand zone, right? A demand zone, and the market just came there and started rallying up to the upside, and you can see that this market came back here, right, to a clear resistance and came back down. So let's go to the weekly time frame because it's a monthly time frame. Let's go to the weekly time frame so you guys can see the clearer picture. Sorry, my network is acting up. Okay, you can see guys that this market came back here. Sorry, let me do this properly. Okay, let me use this. Market came back here, right? Market came here, came down, right, and went back up again and came back down again, and now it's going up. So guys, that is very clear. This is a nice trend. S&P 500 has been in an uptrend for the longest, and it's kind of cool because we only trade what the trading market. So that's a clear example. You can see that on the weekly time frame. Wait, let me delete this. Wait. So you guys can let me delete this. Yeah. So you guys can see that on the weekly time frame that this market formed a double top, right? When you see a double top when you see a double top on the weekly time frame, the market is going to reverse, and you can see the market reverse to this key level here. That's why it's very important for you to plot your key level as well. So guys, if you guys need any help in plotting key level, just comment and I'll help you guys out, right? So guys, that's all about that. So let's go back to my face. If the bias isn't clear, I mark that pair as neutral and probably won't trade it for that week. So if you do this guys, this helps you avoid the mistake of trading against the structure or trading without direction. That is all about number one. Number one is self-explanatory, and I don't want to make this video very long. So let's move to number two. So guys, the next step is step two, that is choose 2 to 3 pairs, 3 key pairs per week. Next, I narrowed down my focus to just 2 or 3 pairs. Why? Because trying to catch every move is a guaranteed way for you to lose your edge. I scanned through the top 6 to 8 pairs, and I only picked the ones that are showing clear zones, clear breaks, clean zones, sorry, clear breaks or potential reversals. I have an example to show you guys on my chart, so let's go. So guys, welcome to my chart. So I'm going to show you the selection process. I've been looking at some pairs like GBUSD, USD, clean breaks, and all those stuff. DXY. The reason I have DXY here is just because DXY always helps me conclude what the USD is doing, because DXY is like the upside down version of Euro USD, and Euro USD is the upside down version of DXY. So that is that. So I'm going to just show you what has been happening. AUD USD is the worst. AUD USD has been a mess. I ignored it.
I'm just watching them. So let's see. You can see on the let's start from AUD USD. See that AUD USD has been just ranging for a couple. It's not even doing anything. So technically, me trading this is complicated. It's shit. I will not do it. So I left it. GB USD. I think wait on my network. I think that GB USD just falling because I think Friday is first Friday of the month of August. That is when NFP will be released. So I think that is the reason, but I'm not sure because NFP have not been released yet. I don't know. I've not checked the news, but maybe I think it's Friday, right? It should be Friday. So this market has been going down. You can see. So I'm predicting this market to reach my last target. I'm not selling it. So no, I'm not selling it. I'm just waiting for it to reach that target. Maybe I'll see my confirmation, then I enter for a buy. I'm not going to trade against the trend, even though this looks so nice. Nah, I'll not do it. So you can see that DXY is going up, right? Sorry for all these lines, just like targets. My targets, you understand? Sorry for the lines. So you can see that DXY is going up. You go to Euro USD, sorry, network, okay? Euro USD, you can see that I think that Euro USD will come to this yellow bar right about here to retest on it. Maybe it might not, it might just start rallying because I'm seeing sign of a green candle, but the candle is not that powerful. This is just a daily time frame. So I'm just waiting for my confirmation. When I see the confirmation, I'll enter. So guys, that is that about the selection process. So let's go back to my face.
Once I lock in my 2 to 3 pairs, that's it. I don't switch pairs midweek unless there's a fundamental shift. By doing this, it helps you avoid the mistakes of overtrading, inconsistency, and pair hopping. That is hopping from one pair to another. So, guys, that's that about number two. Let's go to number three. So, guys, this is step three. Step number three is drawing your zones. So now let's get it's time to get surgical, guys. I draw my key levels, my key zone, be the supply or demand or supply, support and resistance, sorry, range high and lows, and even the 100% retracement. These zones, right, tells me where I want to trade, not just win. Let me repeat that. These zones tell me where I want to trade, not just win. Trading inside noise is the fastest way, bro. It's the fastest way for you to get faked out right now. So guys, I have a little example to show you on this particular step. So let's go to the charts.
So what's up guys, welcome to my chat. This is number step 3, drawing your zones, key levels, right? Remember I told you guys I usually draw my key levels on the monthly time frame, as you can see here. Yeah, that's my key level. That is a 1 month time frame. I usually use the black line for levels that I think my hold that is not that significant. Then I use the black line. But for my, they just call it the minor the minor zones. But for the major zones, I use normal zones, my normal blue zones, right? So I want to show you a demand zone right here. As you can see, the market came right here, right? And started rallying up. And you can see so it respected the black line several times. It has not broken the black line, it's still respecting it. So I think that black line is kind of significant. That's why I drew it. So that's all about that is not all about drawing new zones. I have to show you one more thing on the 4 hour time frame. You can see the overall direction this market is an uptrend, right? So that was the overall direction. Sorry, I'm using my phone. It's kind of crazy, right? So don't mind me. You're just leaning, right? Remember, you know what we call the falling knife strategy, right? I got that strategy from Dapolis, my mentor. Very smart guy. The 49 strategy means that the market wants to reverse on the 4 hour time frame. Maybe any time frame daily. Okay, let's use the daily time frame. Let's leave the 4 hour alone because like the 4 hour is stressing us, stressing our lives. So okay, see it clearly here. You can notice that this market was in an uptrend, right? The market was going up from here, going up. Suddenly the market just came back down. I had ranging forming. You can literally see an inverse head and shoulder right here, meaning that this market might go up. So now with no confirmation, the market just broke that neckline without retracing or retesting anyhow, and went up to the first level target, right? The first level target is always the confirmation. That happened. Then you saw this thing again. It was consolidating, it was tracing, pullback that happened. Okay, let's go to the 4 hour time frame. You guys can see very well clearly. I want to be quick as possible because I don't want this video to be too long. So you can see that this market came for a pullback right here, right around here. You draw your counter trend line like this from the weeks, the highest week to the lowest week. What the hell? Draw your trend line from the highest to the lowest. Using my phone is kind of stressful. So you can see that break you entered and you were in this profit. First level target should be your 100% retracement. Always remember that. First level target took back there, the market went back up, and you saw the same thing again. Second pullback, and you saw the third pullback. This is where I entered. I will not lie. If you go to any of my social media platform, I posted it. This is where I entered this market. I entered right here, the blue line here, but it was not giving me the confirmation I wanted. It was giving me small candles. So I did not enter. I only waited for it to take that first level target and then show me a pullback and show me bullish, some kind of bullish momentum. And that happened. I entered that trade. It made me money. From here in market, I entered around this candle close here. I entered around there, just made me few pips. Still something, guys. So that's all about the 49 strategy. If you really want to know about it, you can comment, you can comment on this video telling me to give you the 49 strategy, and I'll also do it for you. Or best, you can just go to Dapoways. He has the 49 strategy. He has explained in one of his YouTube videos. So just go and learn from there. Or if you want me to do it, I can do it for you. So as you can see, the fourth pullback is always the one that always reverses the market, and you can see the market just came down and it's still coming down. I think it's going to go down because I think it wants to retest this blue line here and then go back, or maybe it might go back up. I don't know, but I'm just going to monitor this pair just in case. So that's all about drawing your key levels or drawing your zones.
By doing this, you avoid the mistake of getting caught in fake outs or entries in random areas. So guys, that's all about step 3. Let's go to step 4. So guys, step number 4 is entry triggers. Yeah, entry triggers. By the name imply, I know you guys already know what this means. So let me just be quick about it. Once all my zones are set, I define what gets me into the game, into the trade. I use engulfing candles, counter trend line breakout. Sometimes I even use break off, a retracement, that's a consolidation period, a break. I need a retracement before I enter that particular trade. So no confirmation equals no trade. It is that simple. No confirmation equals no trade. So I have an example to show you guys in my chart. So let's go.
So guys, welcome back to the chat. So I'm going to still use the example of the Euro GBP. Your entry trigger, that's step number 4, entry triggers, right? What was your confirmation that made you to enter this particular trade? My confirmation was this: a bullish engulfing candle break that broke my counter trend line. This is a perfectly engulfed candle. Seriously, it's so nice, so nice. So that's why I entered that trade. Because of that, I broke my counter trend line, but I had to take precaution because of the first level target and second level targets. This was the second level target. As you can see, the market came back here and started consolidating for a while before going back up. So that was the reason I entered that market, because of the candle, because of the engulfing candle breakout from my counter trend line. So I think that is all, right? Yeah, that should be all. Yeah, that's all for entry trigger. So let's go back to my face.
These triggers reduces guessing, they force discipline, and by doing this, you avoid the mistakes of early entry, no confirmation, and chasing breakout. So, guys, that is all about number 4. We are going to number 5. So, guys, step number 5 is stop loss, targets, and risk. Before I enter any particular trade, I already know where my stop goes, where I'm taking my profit, and how much I'm risking. So normally the SL, the stop loss, is supposed to be few pips below the candle or structure, or below the neckline of a consolidation. Or the target is based on the structure. Maybe the first level target T1, second level target T2, second level target or the final level target. While the risk, you're always advised to risk 1 to 2% maximum per trade. But if but you can risk 1 to 3% depending on your account size. I keep emphasizing on that, depending on your account size. I have an example to show you guys, so let's go to the chart.
So guys, this is step number 5. I'm going to show you how I set my stop loss, target, and risk. So since this market didn't pull back after breaking out of this range, or was it invested and short or whatever, the market did not pull back. The market just rallied up, and you won't enter the candle close break. You won't enter here now, right? The break of the neckline, the candle close. No, it is risky. And it's not mature. You're not mad. That means if you enter there, that means you don't even know what you're doing. So I waited for the market to pull back. I waited for it to pull back and give me signs. Normally, you're not supposed to trade the face pullback, oh, to be honest. You're not supposed to trade because you don't know how long the pullback will be. So I'm just using this as an example, but you not trade. I told you where I trade, right? I told you guys where I trade. So I'm not going to don't trade the face pullback. The face pullback just to show you how the pullback is going to be like. You understand? So that pullback happened, and you saw the confirmation candle break, first level target 100% retracement, right? 100% retracement. That draw it well. Yeah, 100% retracement there. And the markets, okay, let me show you how the stop loss will be like, how the risk to reward everything will be like. So since you are targeting this huge amount of pips, right? Let's just assume, right? You started trading at the first pullback. Okay, just wait, you were just lucky, drew your counter trend line. But normally we don't trade the first pullback. So I'm just using an example, right? Don't trade the first pullback, please. So you entered at this candle close. Excuse, wait. Yeah, let's just say that you entered this candle close, right? You were in loss for a period of time. But what happened? Suddenly the market just decided to go back up, right? You can see you're risking 46 pips to back 189 pips. So your risk reward was to 4 is to 1. So yeah, that means you're risking just one. Because if you're risking $100, you're risking $100 to gain $400. Risking $10 to gain $40. You understand what I'm trying to say? So that was a huge risk. That was a huge reward, risk to reward. So that was nice. You started there and traded there to that point, and the market just gave you all that pips. That is why I said you don't trade the first pullback because the first pullback, you're going to use the first pullback to know the previous pullback that is going to happen. Sorry, to know the next pullback that is going to happen. As you can see here, because of this first pullback, you can know, like, see how many, is it days or whatever, the market was consolidating. Now you can see that you cannot tell me that this the next pullback will not be like that. To be similar to that, you can see the next pullback was like this. So let me show you a clear mistake people did at this third pullback. To be honest, the third pullback is always the juiciest, but some people fail to see something. As you can see, and one more thing, always use the previous pullback as reference. As you can see that this market, I know some people entered this market around here. Let me draw my counter trend line around here. Some people drew their counter trend line around here. Wait, around, nope, around here, and the market broke that level, right? Some people entered a short sell, stop loss below the previous candle. What happened? The market came back down and wick them out with the wick. Oh, no, not like the body of the candle, with the wick. And you can see the candlestick now. This is I forgot, this is a bullish pin bar. Yeah, a bullish pin bar that signifies that buyer are in the markets. So now what happened? The market came down there and started rallying up to our overall target, which was the 0.87385. So guys, that's all about step 5. Please always remember, always check the previous pullback. It will save you a lot of things. Always check the previous pullback. It will really help you. And please, if you guys need a video that I talk about the falling knife strategy or reversals, all those stuff, you guys should just drop a comment, and I'll do it. My next video will be about that. So you guys, thank you for your time. So let's go back to my face. Let's go.
If your RL doesn't make sense, I skip that particular trade. To be honest, I skip it. Even if the setup looks very, very nice or perfect. By doing this, you avoid trading. You avoid taking trades on low RR trade. You avoid taking low RR trades or getting stopped out too early. So that is that. So guys, that is all about number five. Step five. Let's go to step six. So guys, step six is your weekly rules. Yeah, your weekly rules. This is when your psychology gets tested. Before a week up begins, I write down three non-negotiable rules that I personally stick to. Rule one might be no setup equals no trade. Rule two might be maximum three trade per week. Right? Rule three is the most important one. I really, really advise you guys to adhere to it. Rule three is do not do not move your SL, do not move your stop loss one set. To be honest, do not do that shit. It will like don't do it. I won't even advise you to do it. Talking from experience, moving your stop loss is crap. It will mess with you, and the market will still take that stop loss. It always happens. So I really advise you guys not to do it. To be honest, do not move your stop loss. Write them down, and I read them before every session. These are the rules that keep me in control. With these rules, I don't panic over trade because I know what I'm doing, because I've written them down, because my emotions will not come and like take control of me or whatever. So by doing this, you avoid the mistakes of emotional decision. Yeah, emotional decision, over trading, and changing plans midweek. Simple. So guys, that's all about step six. Let's go to the last and final step. So guys, this is step number seven. Or this is the final step, or you can call it step number seven. I'm just happy with this video is yeah, done with this video. I'm just tired today. And today I'm not feeling well. But just doing the video because I post video every 1 week. That is when I post my video. I had to post this week, but I didn't post last week. So number seven, final step is your daily checking. Each morning, I do a 10 minutes check-in. Like, I look at my pairs, I review my zones, and I check for any of my entry triggers, if they are forming or not. If they are not forming, I will not do anything. If not, I don't do anything. I will just walk away. Like I'm going to show you a quick example on the AUD USD. That pay has been just messing up. The pay is crazy. This habit trains your discipline. You stop forcing trades and start waiting for quality. Remember, we choose quality over quantity. By doing this, you avoid forcing trades daily or slowly becoming a scalper by accident or by mistake. So guys, that's all about the final number seven, the final step seven, or you can call it the final step. So if you remember in the beginning of the video, I told you I'm going to share one mindset rule that changed my trading journey to something different, something extraordinary. So, guys, let's go. It's a bonus. Let's go. So, guys, this is a bonus chapter or part. It's titled "The Mindset Rule That Changed Me." That changed me. Here are some rules that changed my trading journey my trading journey or life to something extraordinary. Okay, the first rule is that if a trade happens without me, it was never mine to take. If a trade happens without me, it was never mine to take. Rule two is that if I missed, if us we missed any setup, let you go. Another setup will come. But once you start chasing a particular trade or a particular setup, that is when you lose everything you have built gradually. To be honest, you start losing everything you have built. So if a trade happened without you, it was never yours to take. But if you miss a particular setup, there are more setup out there. Just have patience and keep doing your thing. So stop chasing trades. Now more than ever, you need money. You don't need to lose money. So that is that about everything about this video. So I have something to tell you guys in this other side. So let's go. So guys, that's how I build a weekly trading plan that protects me from 90% of the mistake I used to make. I don't rely on signals. I rely on structure, planning, and confirmation. And if this video was helpful to you, Please don't forget to subscribe, like, and even comment. Tell me what you have learned. To be honest, tell me what you have learned. Remember, this is Hamir FX. Let's trade, let's trade, let's go, and let's win together. And please, guys, don't forget to stay profitable with Hamir. Bye.